Good afternoon. I'm Mike Gottlieb, the global leader of the EY restaurant practice. And today I welcome CFO panelists to discuss the perspective in reacting to COVID-19 by embracing technology, ensuring health and safety of your workforce, and maximizing the customer's experience. We have a great panel representing both several sectors of the restaurant industry, as well as different ownership structures and company-operated stores, as well as franchise operations. You will find today's discussion relevant to all in attendance and is intended to be more of a continuum from the initial outbreak of the impact of COVID through strategies being implemented today. And one thing that we won't have is we won't have similar discussions and rebuttals and talking over as we did in the presidential debate, as each of our panelists are very cordial and respectful of each other. So we should have a great panel to discuss today. And without further ado, it's my pleasure to introduce each of our panelists, and I'll allow them to describe their concept as well as their background. We have Matt Clark from the Cheesecake Factory. We have Stephen Pattison, Risk Management Restaurant Services, which is Burger King's independent purchasing and distribution co-op. And we have Roland Wood, Grimaldi's Pizzeria. So Matt, why don't we start with you and give a background of the Cheesecake Factory and your more recently expanded operations with the Fox Restaurant Group and yourself.
Sure, thanks Mike, and everyone virtually. It's a pleasure to be here. And I think most people know the Cheesecake Factory, at least I hope they do. But a couple of things about our company. We've been around for more than 40 years. We've been public for almost 30 of that. We are known for our outrageously large menu, 250 items plus and 30 varieties of cheesecake. We're also known, particularly in the investor circles, for our really high average unit volumes. We do almost $11 million. And personally, I've been with the company almost 15 years. I've been in the CFO role for about 3.5, and my background is really in consumer discretionary areas. I worked at Disney, I worked in a CPG business, I worked for Kinko's, so I came up more of the corporate planning side. And it's really my first restaurant job since I was in college when I waited tables at a small place in Massachusetts. So it's been a great learning experience and a great place to be, and a pleasure again to be here today.
Great, thanks Matt. Steve, why don't you go next?
Sure, Steve Pattison with Restaurant Services, Inc. We are, as Mike mentioned, the independent supply chain manager for the domestic Burger King system. I think everybody knows who Burger King is, with over 18,000 units, over 100 countries around the world. In the US, we have roughly 7,300 units. The vast majority of those are owned by independent operators, franchisees. So we have a different ownership structure than some of these other concepts. I've been in the Burger Kingdom for 30 years, so last 20 as CFO for this organization, 10 with Burger King Corporation as a VP of their corporate finance team. And I jokingly say before that I was a recovering CPA with KPMG.
Thank you, Steve. And Roland?
All right, thanks, Mike. Roland Wood, Grimaldi's Pizzeria. Similar to Matt, I started my career in the restaurant space when I was younger, and making the full 360 now back with Grimaldi's. I've been with the company for about 2.5 years or so. I've spent some time in retail, construction, real estate, most notably PetSmart for almost 8 years. So I really cut my teeth, if you will, there in that space, and kind of came up similar to Matt also through the corporate planning side. So again, been with Grimaldi's about 2.5 years. Our company, which may or may not have heard of us, we're not as big yet as Cheesecake Factory or Burger King, but we have over 40 units across 11 states, and we're best known for our coal brick, coal-fired ovens. So that's one of our main differentiators, is that brick oven coal-fired pizza. So all of our restaurants are company owned, and we're definitely getting involved in the franchise space, both domestic and internationally. So we have a lot of growth ahead of us, but we're excited where we are.
Great, thanks Roland. So you can see we have a quite diverse panel. So hopefully this will be very insightful for all those in the audience. Before we start with our questioning, Patty, why don't you launch the first polling question? If each of you can see that, how many restaurants do you operate or franchise, with a number of different restaurant designations there? So select that, and we'll give you a few seconds to do that. So in getting started here, why don't we start with Matt as it relates to the COVID-19 impact on your business. But going back to March, could you discuss the key metrics of your business just prior to COVID and the impact the pandemic had on these metrics, reflecting on the lowest point that you hit? And then discuss your initial playbook. What was the strategy that you implemented immediately after the shutdown by the government was mandated, and discuss the impact on your business as it relates to that?
Sure. Well, I guess it's about 6 months ago, but can almost remember it like it was last week, because it was such a defining moment probably for so many of us in our careers. And it really happened so fast. I actually remember early March, myself and our president and our VP of Investor Relations went to an investor conference in Florida. And, you know, it was just beginning to get some news, the pandemic. And in fact, they had little placards on the table that you weren't supposed to shake hands, right? And so that was like, oh, that's kind of interesting. And people are being safe. And, you know, and we flew home and it seemed fine. And then the next week, right, the ball started rolling very, very fast. I think our company had started creating a committee already, because we felt like we needed to get communication being the most important thing ready, and how we might deal with whatever was going to come. But I don't think we expected quite what happened. Maybe when Harvard decided to shut down, when the NBA decided to shut down, those were some pretty big signals. And then, you know, really over the weekend, you know, states began to talk about and began executing shutting down dining rooms, which for us is a really big deal. And then we participated in a call with some major public restaurant companies, full service, and they had actually spoken to high-level administration people in Washington and let us know that wave of closures of dining rooms was likely to move across the country very rapidly, and in fact it did just that over the course of a week. Fortunately for us, we have always had a lot of good off-premise business. And so we sort of knew what that needed to be when the dining rooms closed to keep the engines running, at least, albeit at a lower level. But we immediately moved to permanently or only off-premise. And a couple of the key things about that is, you know, we had a really strong start to the year. I think many companies had. I think we were running maybe positive 3% comps at Cheesecake Factory, maybe positive 5% comps at North Italia, one of our other bigger brands. And so as we shifted in, you know, you had to look at the people and the processes and the technology to be able to implement that. And certainly, for example, with supply chain, slowing it down. Because we were so busy and we were doing so well, there was a lot of product on order. How did you have to navigate that piece of it? Because the volumes dropped initially by about 70%. You know, we did furlough. Unfortunately, many of our employees and our management teams actually ran some of the shifts and supported that piece of it. And then we also implemented quite a bit of technology, which I know we'll talk about later, to make the guest interaction a little bit more seamless and safe and secure. And that was always our guiding light, was safety and security. And so certainly one of the other things that was early on in our playbook is how could we acquire PPE and get enough of it. And if anybody remembers that period of time, the price of hand sanitizer was higher than oil, I think, you know, and it was one of those things where everybody needed it and there wasn't enough of it. But we went from that positive 3% to the second quarter. I think we were about negative 57%, right? So it was pretty significant overall decline. But what we felt great about was that the off-premise business maintained at a $4 million plus AUV level, which is more than most restaurants do anyway. And so we did sustain sort of our engine, and we kept things going. And we really looked at the same metrics. You know, what was the guest feedback? What was our hourly labor? What were the efficiencies for the food prep, et cetera? And so we built real-time systems to be able to give to our operators to let them know, hey, we're still a business, we're still moving forward, and we're still looking at all the same things that we did. And so all the teams from corporate really helped support that, finance, IT, HR, et cetera, to make that transition. And then, you know, by obviously about a month later, really in June, we started reopening, and you know, we can talk about what that looked like in one of the next questions. But that was kind of our rapid fire movement within about a 1 week period of time to the off-premise only model.
Great, Matt. Unprecedented. What did you do from a cash position standpoint? As a number of companies, especially restaurants, pulled down on their credit line just to be safe, to have sufficient cash, because nobody knew how long it was going to last and when restaurants could open.
Yeah, that's right. And I think a lot of people don't really respect the level of working capital that restaurants provide, right? So we're you know, getting in the revenue almost immediately, but we're paying bills 1, 2, or 3 weeks later. And so that immediate crunch was coming through. We did draw down on our credit line, the remaining balance, and that was $90 million. And then subsequently, throughout the pandemic, we went out and we raised an additional $200 million in equity from Rourke, and really to make sure that no matter what happened, we were ready to weather the storm, because we didn't know how long it'd last. And still, I think there's uncertainty today. We're all hopeful that the winter will be okay, but we wanted to make sure that we could make decisions that were appropriate for the long term and not just for survival, and really to treat our employees as best as we could throughout that.
Great. Yeah, it's amazing how quickly those transactions that may have taken much longer were executed, especially the transaction referred to with Rourke. So that's it
was pretty much lightning speed, real time for, you know, 30 to 60 days. It was pretty much nonstop. And fortunately for us, we also had in place what I consider to be a really great business continuity situation. We had tested that, if you remember the fires in Southern California a couple of years ago. So our corporate office was able to go virtual immediately. And so we didn't skip a beat, and our IT teams and everybody helped support that. And we kept all of those functions moving forward that was supported the transaction, obviously, and as well as the field teams.
Right. Great point. Roland, how did you and your team deal with it?
Yeah, so I would say our story and our path is very similar to Matt's. You know, one of the things that we really focused on from a operational standpoint is really the procurement side. So given all of the dining rooms were shut down, we quickly brainstormed, you know, what are the non-essential expenses we can either defer or put on hold for the time being. So for us, that's music, ambiance, it's linen frequency, those kinds of things that really tied into you know, the cash position that we just talked about a little bit. Because in conjunction with that, I went to work immediately with my team doing some forecast modeling and understanding based on this new world. What do we need our labor to run at? What do we expect sales to be? Similar to Matt, we had to make some tough front of house hourly labor decisions, as well as making the decision to keep all of our salary managers. So we leaned on them a little more indifferently than we had previously. So, you know, understanding financially what that looked like and understanding what that cash burn potential might look like in this new space. So we had a very similar output that Matt talked about. You know, April, May was kind of rock bottom for us, and then we started to recover a little bit as we got our arms wrapped around the third-party world and the pickup space. You know, for us, I'm grateful we're in pizza. That's a little easier to operate for pickup and to go. So we were able to navigate that, you know, a little easier and seamlessly than maybe some of our fast casual partners might have. So, you know, I'm grateful for that. But you know, within the operations space, we have a lot of really great owner-operator GMs who, you know, are very entrepreneurial minded. So they understood quickly, you know, how do I retrofit a to-go pickup space? How do I funnel that traffic to a particular area of the restaurant to, you know, make it clear and easy for them? We even had some where they were able to get a curbside pickup accomplished. So a lot of, I think a lot of creativity and a lot of just know-how with them in their space and their markets to be able to minimize the pain, if you will, as we went through this. So, you know, similar to Matt, again, just in terms of metrics. I mean, for us, traffic and average check, continue to be major ones for us. And for me, it's monitoring, what both of those look like, and in conjunction, and what are our pivots on marketing and moving more towards the third party space. We had a couple really big partners, and then once this hit, we immediately added a couple of the other big players as well to maximize our reach. So just trying to grab as much of that customer base as we possibly can to drive that traffic in conjunction with our marketing and some different promotions, for people who are, we know we're stuck at home. So, what are things we can do for families who might have kids at home? And, as an example, we did a promotion where you can get like a kid's pizza and included like a piece of dough to play with for $5 if you buy a 16-inch pizza and a salad. So just some creativity around the marketing and understanding the world people were living in at that time, and doing our best to be a good fiduciary in the community, right? And just trying to give people an outlet and something to do with their time. So I would say an easier question, quite honestly, and I'm sure Steve and Matt would attest to this, is that, what we didn't touch. I mean, we kind of turned everything upside down and shook it out and looked for every little efficiency improvement we could find, from procurement to rents. And I know we'll talk about some of this later, but just everything we could to kind of slow the expense and maximize our runway based on, the unknown at that time of how long this was going to last for us. So, and, this is ongoing, we're 6 months in, and we're not close to all the way back, and we're not sure we're ever going to get there. I don't know that anybody feels that they will. So for us, it's been an evolving learning experience, but I would say after that 30, 60 days, we started to get a little traction, and from there, start to understand our new space a little bit. And then, as we get into the second and third phase, as other independents and maybe smaller chains are not going to make it through, what does that look like for their volume, and how do we position ourselves in the industry to be able to support that demand that now is looking for somewhere to go. So,
right, great. Yeah, with your expertise in delivery, all of a sudden you had a lot of competition where everybody was delivering, where before you had a pretty good market share there. So that I'm sure was interesting in navigating through and getting to the next phases that you said. Steve, from your perspective in Burger King, especially being that Burger King has a large franchise system and the impact to the franchisees, it'll be interesting to hear how Burger King and you viewed that and different things that were offered to the franchisees to help them weather the storm.
Sure. Well, first of all, a very similar story to Matt and Roland in terms of the metrics. Obviously high focus on, you saw your sales go off a cliff and traffic go off a cliff late March, early April, had a strong recovery. I think the good news is quick service food by its nature was probably better positioned than a dine-in centric restaurant sector. Roughly 2/3 of our sales were through the drive-through anyway. So we saw actually some strong pickup once we sort of got through that April period in the drive-through, with even higher sales there. Obviously, a lot of our dining rooms were closed for due to local jurisdiction for a long period of time, but we're able to offset some of that. And I guess it's fortuitous. We had tested delivery last year, 2019, and in January it was mandated with 4 delivery partners. So boom, we were ready to go. Just again, hindsight's 2020, but thank God we had done that as well. And our delivery volume has significantly increased. So we were able to sort of offset not 100%, but a lot of the lost dine-in sales with the increase in the other 2 channels. In terms of Mike, what you did describe in the franchise, obviously Burger King Corporation, a large public company, pulled down all of its debt facility, billions of dollars actually, in debt just to have liquidity, and was very concerned about the financial position of the operator. So they did several things to give immediately. One was they provided loans up to $15,000 if a franchisee wanted it per location. Kind of no questions asked. You need the cash, let us know. That's what some of that liquidity was for. They offered a lot of guidance on applying for PPP loans. I had a bunch of webinars on this topic with the operators. Set up a special team, sort of a SWAT team, if you will, of finance folks to actually help the operators apply for those loans. My understanding is around 90% of the operators received a loan, a PPP loan. So it's a pretty good and impressive track record. Burger King, in some cases, is a landlord for some of the franchisees and gave some rent deferrals, sort of automatic 45-day deferrals. And then lastly, there's a bunch of capital mandates in the system right now for things like upgrading the experience in the drive-thru with digital menu boards and that sort of thing. So they postponed the mandated dates by a year, sort of like kicked it out a year, saying, look, you guys can take a year off, preserve capital, just need you to stay in business right now. And you know, we'll get to, once we get on the other side in 2021, we'll pick these things back up again. So it was a pretty robust set of support for the franchisees. And Matt mentioned supply chain. We're going to cover that later. But when you take a supply chain our size, $3.5 billion a year, and slam on the brakes, it's sort of like, it's like on the interstate. Cars keep hitting cars along the way. And that's sort of what happened with us. We had to really work through the recovery on that. And again, we'll get into that question a little bit later.
Great. Thanks, Steve. Patty, why don't we launch the next polling question here? This polling question is, what sector within the restaurant industry do you operate? So please select the appropriate sector. So now let's move forward to actions that you implemented as a result of COVID-19. And each of you touched on it as to the day of or within the first month. But then as you started getting a grasp on the impact of COVID-19 and the real effect that it had on your operations, let's talk first about the customer and the impact to the customer and digital. How did you pivot your operations to address dining room closures and change in the revenue channels, as you each have alluded to an off-premise or outside dining model? Also, if you can comment on how you utilize third-party delivery. Have you used one of the third-party delivery partners, or have you used several? And the challenges that you have in reconciling now this large volume of activity as it relates to having such a large increase in delivery. And the, you know, we could talk about this probably all day as we did in the prep of this, but how the cost of that delivery impacts your margins and your perspectives on that. And also the additional costs that you have of the packaging materials to ensure the quality of your food when it gets to the customer is to the standard that you'd like. So I'd like to just kind of get your perspective on each of those. And Roland, why don't we start with you first?
Sure. So like I mentioned earlier, one of the first things that we did was focus on adding as many of the big third-party players as we can. So just for clarity, and so everybody understands, we don't actually do our own internal delivery. So we lean exclusively on the third party. So we have predominantly pickup, third party, and then in dining are our three main order modes. So for us, from a total company perspective, our pickup pre-COVID made up about, you know, give or take 16, 17% of our business, and an additional 6%, give or take, of third party. Well, as you might imagine, once COVID hit and is in full swing here, our total third party and pickup is approaching 40 to 50%. So I mean, it's a massive, massive increase for us. So obviously, you know, there's a lot to consider and do and pivot on based on some of that activity. So like I mentioned, we immediately went into adding a couple additional partners. And prior to that, we had plans coming into the year of rolling out an online ordering strategy. So we do have a website, obviously, and we've just recently created order online functionality, pay online, et cetera. But in addition to that, we've been really focused on how do we drive our customer to order online, have the functionality then for us to then essentially parse out that order delivery to, you know, be it Uber, Postmates, DoorDash, whomever, based on the lowest cost. And then we in turn pay a flat fee. So for us, that is a better scaling option for us. Number one, cost-wise versus a straight percent of delivery versus how it typically is. Roughly our break even on that is if we convert 20 to 25% of those folks who would otherwise come to our platform for delivery versus directly to DoorDash, Uber, et cetera. So we felt like at a 20% hurdle rate that was fairly easy for us to accomplish. So that's something that's in process, number one, to address the cost. And a byproduct of that that's really important, that I'm sure we'll talk about a bit more, but I think is really critical, especially as we start intertying loyalty programs and other mobile functionality, is the customer data. As I'm sure you guys know, and most out there listening and watching know, these third-party delivery companies own all the customer data, and that's a big deal, you know, for us, and I'm sure for Matt and Steve and others out there as well, to not have that visibility to who our customers are, their demographics, their behaviors, their characteristics, etc. So for us, the online order strategy as a byproduct, allowing us to start capturing some of that info to then intertwine with our loyalty program that we're working on now was just huge for us. So, you know, from a marketing perspective, we also focus with them on different promotions, right? So buy one, get one deals, reduce delivery to try and drive some of that first time traffic, and other things like that. We talked about a little bit, this is something that my team and I have talked about this week. I think a lot of the finance, accounting specific folks out there can relate to just the complexity of these. You're wrapping our arms around the financial reconciliation piece with these third-party delivery partners. You know, prior to COVID, we had 2. It was pretty straightforward. It was a percent of each delivery. Now we have, you know, 4 to 5, plus all the promotion expense and, you know, multiple sites. And so it's a huge deal to make certain that that's right, and measuring return on investment with some of those things, helping marketing do some of that. So those are some big aspects with third-party delivery. And, you know, with the pandemic, you know, I think everyone would agree that this is not something that's going away. I think, you know, to some large degree, pickup and third-party delivery is now a staple of what we do, and it's permanently changed. I think customers have realized the benefit of a lot of that, and that's just going to be a part of their life to some extent. So on a go-forward basis, this is something that we have to really focus on and get right. And I think the technology piece wrapped in with the operational execution of it is super important.
Great, Roland. Have you also implemented outside dining of your restaurants, with dining rooms being either fully or partially closed? And maybe you can comment on how you approached that.
Many of our sites do have patio space, thank goodness. And so where we have been able to utilize those, we have. Those have been wildly popular. There's a you know, despite, yeah, you guys know that just people in general, there's all walks of life. You know, the people who are just super concerned and afraid, and other people who they don't really care and they're just going to live their life. And so, but we have quite a few people who we've attracted, you know, to come to the patio space, and that's a standing wait for us typically. So wherever we can, we've not only opened our patio, but extended it as we can. I mentioned our GMs earlier are super creative and have found ways to safely and lawfully, of course, extend those patios a little bit and use some additional space. So all within the 6 feet rule and everything else we have going on. So yeah, we've absolutely leveraged that best we can. And as a lot of the regulations have loosened in some of the municipalities that we're in, you know, we've continued to add some of that space. The interesting thing that we've experienced, and I'm certain Matt can attest to this too, is with some of these sites, even as they've expanded their capacity allowance to 50, 75% or even greater, but they're still maintaining the 6 feet distance rule. Well, we're just maxing out at some level. We can't take advantage of necessarily a 50 or 75%, depending on the restaurant layout, you know, and still adhere to that 6 feet rule. So that's been a disconnect for us to try and figure that out and understand how do I pivot and Tetris my restaurant layouts where I can achieve that 50 to 75% and still adhere to that 6 feet distance rule. So operationally, that's been a challenge for us, and something that we've really been focused on here lately as we've been able to expand that in dining space more.
Great, thanks, Roland. Steve, from Burger King's perspective in pivoting to off-premise and outside, or I should say, and more delivery and drive-through, Burger King already had a lot of drive-through, so perhaps you can expand on how that changed with dining rooms being closed and the dynamics and economics of the dining room being closed as far as the impact. And also, I don't know if Burger King has looked at possibly, because of volumes coming through their drive-throughs, et cetera, of looking at ghost kitchens and things of that nature, but that may be an interesting additional area to address.
Sorry about that, I muted myself. Absolutely, as I said before, we were well positioned with drive-throughs. We were in the process of upgrading to double drive-throughs. The idea is that over the next several years, we want to get every single drive-through to a double with digital menu boards to enhance that experience. So that had been well in play beforehand, and it's in some ways with the increased traffic, it may actually accelerate our need to improve that drive-through experience as well. The delivery, as I said before, it really kicked up in volume significantly. For us, I think for all of us, delivery economics are challenging, but when you're in our size of a ticket versus maybe the dine-in tickets, it's a little even more challenging, but we're able to make it work. And one of the things that's interesting is the delivery ticket's almost twice what the average consumer ticket is in drive-through, or when we do have in-restaurant dining. So that helps make up a little bit for the commission as well. Talking about the reconciliation, Roland referenced, it is complex, and it's geometrically complex when we have 4 delivery companies, and then we relaunched our what we call white label delivery through our application, a Burger King proprietary application, and you can order delivery on that as well. So when you are an operator and you have 5 different data sources, usually settling once a week on different days of the week, it can be, to say it's complex is crazy. It's one of the things we've tried to do to address this is our company is designing a web portal that we've already launched phase 1 of that collects this data directly from all of the delivery partners, puts it into, if you will, a data warehouse that's then the operator can log on, look at, and then it matches their POS sales with the delivery service modes in it to what is reported, and they can use that tool, if you will, as a delivery reconciliation device. We're still upgrading it because as we've launched it, we realize the devil's in the details with these sort of things, and there's more that we're adding to it. But it's a great tool that they're using, and the operators are very happy. It gives them something to, quickly sort through this data and help work our way through it. One of the challenges is these delivery companies who say that they're data driven are not really good at consistently giving you clean data. So that's something that we're just trying to work our way through. But we're making progress. I think, Roland, you mentioned this, big push for your own private label, because then you can, the consumer data is yours. And we have a big push on that right now. Once you're able to transact and have that CRM data, it's like gold. You can push offers to them based on their, if a consumer gets a double Whopper with cheese, you can say, hey, you bought this last time. How about coming out today, right at 11:30, why don't you have one of those at lunch? And then there's all kinds of things that you can do in the future once you kind of grab that data and have it. So there's a big push right now for that as well. So those are just some of the things that we're embracing now in sort of this new world. And I think a theme I've seen, and I think Matt and Roland would agree to me, things that might have taken a longer period of time to pivot and adjust to are accelerating at a very fast pace. Things like for a period we were on a limited menu in some markets just because it was difficult to get the products. We're taking a look at it now, saying maybe we should test those things. Mike, you mentioned ghost kitchens, and I can't get into it because it's a public company, but there's a lot of let's say innovation activity, looking and kicking the tires at that. Things that might have taken longer will take a very much shorter period of time as well.
Yeah, there's not as much beta testing and testing various geographies over as long of a period as there was previously. It's let's put the bootstraps on and let's go, and we can modify as we go is kind of the approach that I've seen with many restaurant companies. So Matt, from the Cheesecake Factory, in looking at being a full service restaurant, having a very extensive menu, as well as now shifting to delivery and some outside dining. Perhaps you can comment on your menu as to what modifications, if any, you made, as well as your perspective on ghost kitchens as well, as that may be something that you would be considering.
Sure. Thematically, there's a lot of similarities between the different segments of the industry that are being discussed today. In hindsight, I would say we were in a really good foundational position, but I would echo the speed at which that has evolved and changed. So we had already established delivery pretty strongly. We're exclusive with DoorDash, and that's a long-term relationship that we've had with them. And we were integrated with our point of sale. So we don't have any reconciliation issues, anything like that. The operators already got that down pat. We had already had our own online ordering. We had redone all of our packaging about a year earlier. So I think there's a lot of similarities, pardon me, with that. And the thing that we saw with our teams was the acceleration of the change. And just to sort of go on to that piece of it, not so much about the concepts itself. So for example, we only trimmed maybe 10% of the menu, and that was only during the off-premise only phase. As soon as we reopened the restaurant dining rooms, we opened up all the menu again. We feel like that's a competitive advantage for us, and we're sort of leaning into that as others are peeling back as a way to continue to build that moat, if you will. And I think for us, it was really more technology driven. So we implemented an IVR, and that was something that we had kind of shied away from for a long time. And frankly, wasn't the best guest experience if you called the Cheesecake Factory to get something to go previously, because you might be put on hold. It was so busy, it was hard to hear. This way we could, divert those guests directly to online ordering or to delivery or to whatever their preferences were. And I think that helped the operations piece as well significantly. Things like a QR code for the menu, making sure that we use text paging for people, making sure we had the touchless curbside pickup, right? And how many people now today just pull up in their car, text the restaurant, open the trunk, and out comes the food and away they go. And I think a lot of those things, as Roland said, will be here for a while, if not permanently. With things like the ghost kitchen for us as we evolve through what may be on the other end, is probably not as relevant with the Cheesecake Factory brand itself. One, because we already make everything, so we're not going to come in with a new segment or something like that because we already have it at the Cheesecake Factory. And I think, secondly, in terms of utilization of the kitchen, as we've rebuilt volumes, we're getting back to where we were just as busy. We did make, Mike, and you alluded to this earlier, an acquisition last year, Fox Restaurant Concepts, and I think there will be some opportunities with those brands to trial it out. And some interesting real estate opportunities. We have some big boxes with some of the Culinary Dropout brand in Phoenix that we're looking at. Could we do a Flower Child pop-up? And that's a totally different type of restaurant. It's a fast casual, healthy halo versus more of a social bar scene. And so I think we will look at that and innovate and make maximum use of all of the space that we have. I think also for us, it was really around the marketing side. And, we don't do traditional TV and other things. We're a word of mouth company from the very beginning. But this fits right into that. I think digital plays a lot more to that. And I think we feel more comfortable where we're making those types of offers that we may not have done before, but we're doing it online only or for lunch only, and sort of maximizing that revenue management, if you will, given the capacity constraints. With regards to the patios or in-room dining, we've got a good setup with very large footprints. So we haven't had a problem with the 6-foot rule yet. And our patios we've extended in most instances as well. And I think, as everybody has noted, the demand is there. I think guests are looking for experiences today. And what else can you do? There's not a lot of movie theaters open. No live sports, a few. And so when I've been going out to our restaurants and seeing it anecdotally, I see people wanting to have an enjoyable experience because that's what they're doing for that aspect of their life for today. So, it's been a great reopening to see guests wanting to come back out and to feel safe enough to do so.
Yeah, that's right on, Matt, being that, customers really, you want to maximize their experience, and you don't want to make that experience one that is minimized by COVID and going into a restaurant where you got plastic forks and paper plates, and you want to be the customers that want to come to a restaurant want to experience that restaurant's ambience and that feel of that restaurant. So that's important. Those that aren't quite comfortable to go in the restaurant, that's where delivery and the off-premise channel continues. And those that are in between, the outside, gives an opportunity to be outside and provide the dining experience in an open air situation. So
I think that's right, Mike. Exactly.
So let's before I ask the next question, Patty, why don't we launch our next polling question? And this one is, what is the ownership structure of your restaurant? And you can see the 4 options there. So each of you have touched upon the use of technology, being able to gain data, looking at social media. But one thing that a area that wasn't mentioned that I think the audience would be interested in is loyalty programs. And loyalty programs have become very popular. Again, a lot of restaurant companies have reconfigured or relaunched their loyalty programs. And also that provides you the data that you may not be getting from your third-party delivery service. So let's just touch on how you've incorporated and/or embraced loyalty programs and also social media in pushing out and/or utilizing that input to be able to maximize that customer's experience, to be able to make that customer feel that that customer is an important customer to you. So with that, why don't we have Steve start the response to that question?
Yep. As I mentioned before, Burger King had an app before, but it sort of relaunched it, a much more robust app, and embedded some loyalty, and it continues to evolve loyalty as part of that app. That's one of the goals, in addition to grabbing the CRM and creating customized offers based on the customer's behavior, also rewarding the customer for for more frequent dining. So that app has still got some legs. It's still got some upside to it, but it's early returns from my understanding from talking to our peers in marketing is that it's working really good, and they're happy with that. Obviously, social media is the next big opportunity for advertising going forward. I think Burger King and RBI, its parent, have done a really good job of exploiting that, for lack of a better term. They've done some social media only promotions, which are tough to forecast because you don't know how the consumer is going to respond, but some of them have done very, very well, probably much better than expected. And so they continue to invest in that area as well, particularly for the next gen customer who's more likely to respond to social media than they are to what we'll call traditional media. Mike, I think you're on mute.
Yep, I hit it. Thought I was on mute and I wasn't. So, Matt, why don't you provide your comments as it relates to the Cheesecake Factory and loyalty program and how you utilize social media?
Sure. Well, as of today, we don't have a loyalty or rewards type of program. It's something that we've thought about, we're evaluating, and certainly the learnings from post-COVID could influence our thoughts on that, because I think what we've seen is you can have a modified version of that by allowing for customized programs to roll out, whether it's DoorDash specifically or through your own online ordering. Like I mentioned, you could do something just for lunch, and you can have different ways that you can find what is the elasticity of consumers based on a variety of different opportunities, and what is their return order rate, because you're then tracking that, right? It's really important to have that lifetime value comparison if you're going to do something. So we'll see, whether that morphs into some sort of loyalty or whether it just continues to be something where we can have these customized, individualized. It's a little bit more on brand for us today for Cheesecake Factory to do something that in that manner. We found that the cheesecake itself is a huge draw, so every time we tie something into that, it usually does really, really well. And it morphs well with the social media too. I think Steve is right on. If you're launching something and you're using more PR, if you will, or that type of avenue to drive the awareness, there's that fear of being left out right today, and people like that short-term, hey, it's only available and it's only here and you can only get at this point in time. And so we're looking at that as well, and I think we're more apt to continue to try that than we would have been with traditional media. And I think that's the big shift. I think digital, this is the pivot. People have been talking about digital, and it's definitely taken hold, and it's here, and I think it's going to continue to be more ubiquitous. So, and I think we get better ROIs, and Roland had mentioned that, being able to see the results of that makes us feel like, hey, these are really good investments to do. So we'll see how that continues to progress. We've been really pleased with it so far, and it's, we're still early innings, I would say.
Yeah, it's an interesting dynamic with with those that had larger advertising budgets, unlike the Cheesecake Factory, but many are now redeploying those budgets to technology, to digital, to social media. So it's interesting how that shift has taken place. Roland, you had mentioned earlier regarding not having the access to the data that maybe you could get if you gave access from a third party. Loyalty program is one avenue of that, and social media is another avenue that you can track and offer different programs. So how have you embraced that?
Yeah, so I would say Grimaldi's is on a similar trajectory that Matt talked about with Cheesecake. We're definitely in the R&D phase for the loyalty, and so I alluded to that a couple comments ago, but we're looking through that now and trying to figure out how that works for us. To our benefit, we do have a very extensive, what we call EVIP database. So, just essentially those loyalty program folks who would be that first original load. A lot of people, well, I shouldn't say a lot of people, but anybody who knows our brand probably knows that one of the main things that we do and that we're known for, aside from our pizza itself, is we do a birthday pizza. So if you sign up to our EVIP program, you get a free 16-inch pizza on the month of your birthday. So for us, that's an easy and obvious intertwine into the loyalty program, as well as how we're going to build out the structure, right? So based on points, based on dollars spent, what do we get? What do we give guests when they reach a certain gate of points or dollars that have been achieved? Do we consider a free gift for signing up, be it a free dessert, appetizer, something else? So we're going through all that now, through the R&D piece. But like you had mentioned, Mike, that's the key piece for us, is by doing that. And Steve had mentioned in an earlier comment, we'll be able to very clearly and obviously target market at that point once we understand those consumer behaviors, what they're buying, what they're not buying, when their birthdays are. We're able to measure how many visits they have in a year in the preceding 12 months prior to their birthday. So we can kind of understand those who, maybe just come in once a year for their free birthday pizza and their water, and then we don't see them again for 12 months. So, today we don't have that kind of visibility, and that's really important for us to understand who those people are and how we can potentially get them in an extra time or two. If you consider a database of, I'm just making up a number, 1 million people, if we can get, conservatively half of those people to make one extra visit in a 12-month period, I mean, that's just, on an average ticket of even $20 to $30. I mean, you can do the math there. That's just monumentous to our bottom line. So we're thinking about it in that way, in terms of driving traffic and more frequent visits, as well as some other operational improvements. I didn't mention this before, but I think this intersects nicely with the loyalty, is we also just got done rolling out guest Wi-Fi in all of our stores. So that, in that same vein, is allowing us to capture that customer data for those signups. And where we're preliminarily very excited about this is that we are finding a very large majority of those guest Wi-Fi signups are not our current EVIP customers. So what that means is that there's a very large incremental base of customers we have out there that we can add to that existing EVIP base that, again, funnels into our loyalty program. So we think that there's a very, very long runway with this for us. And to Steve's point, and just what we've been talking about in general, is going to allow us to target market quite better and more efficiently. For us in our space, growing our day part business is super important. We generally have our biggest business in the evening, early evening to the evening, and then weekends. So being able to hypothetically target some of those people who otherwise, might be every Friday night, maybe we can get them in on a Wednesday afternoon, or maybe a Tuesday late morning type of thing. So we have a lot of different ideas and options that we're kicking around, and really trying to understand the upside with this, but we think it's monumentous for us. And and I think, just to kind of wrap up the thought, I think the pandemic for all of us has made us really rethink some of this and try and either add it if we don't have it, or really improve it if we already do, just because it's that much harder to reach the customer right now. And so I think in time, in very short order, loyalty programs and technology like this is just going to be a standard cost of business, and something that's expected from everybody. So.
Yeah, and we really will change the business in the future for good, and certain channels that you perhaps didn't look at before, you certainly will look at and will be lucrative in the future. So let's look at supply chain. Each of you brought that up a little bit as we were talking about the initial impact. What impact has the supply chain had on your business, based on things that you'd have had to modify. There were some factories that were impacted by COVID that had to close down. There has been some shift in working with larger producers to possibly having more smaller producers to add a little agility to your supply chain. And I guess the other piece is, and Matt, you commented on this, that you really didn't modify the menu too much, but when you modified the menu for those of you that did, what impact did that have in your supply chain, and how have you embraced that? I think Steve, got to lead with you here. This is your business. So how did you address this with Burger King?
Well, I think the analogy I used before is like on the highway and somebody stops and you got a bunch of other cars going right behind it and they each run into each other. That's sort of what happened. You had this great destruction of demand from consumer very suddenly in late March, early April. We have a huge supply chain, 29 distribution centers, $3.5 billion worth of flow every year. We had to put the brakes on a lot of that and from a production point of view. Before we had a pretty good sense of pretty good forecasting models and pretty good sense of what demand would be. We're guessing at this stage. We're coming in, so and I don't know how much to produce because I don't know when we're going to be able to open up again and when the consumer will come back. A lot of our product, particularly produce, has very short shelf life. A lot of that produce got thrown out, for a period of time, and there's some other products that hit shelf life. It became really, really challenging. So that early period was a lot of uncertainty, a lot of communication with the suppliers, with the food service distributors. The food service distributors had to do, to the extent that they had broadline business, more independents than chains. They furloughed a lot of their warehouse labor, a lot of their drivers. So then there became some uncertainty about their ability to, they were down to skeleton levels of picking in the warehouse and drivers. So then that's another layer of uncertainty on top of not knowing what the demand is. And then finally, a lot of our suppliers, particularly the protein set, they really had challenges staying open. You probably read about some of these, pork, beef, poultry, all sectors got impacted. These meat plants are not designed for social distancing. You've got people elbow to elbow, trimming, depending on the nature of the operation. If there's a COVID positive case and you shut the plant down for 14 days, as it occurred with us in several categories, we were scrambling for product, finished product to try to get it into our restaurants. Just at a time when a lot of the restaurants started coming back online and demand started surging again, the worst possible time you can imagine, we had to deal with that. So the best way I can describe it, it's been whack-a-mole. You hit this one and you fix this problem, and this one pops up. Every day was a new day. You knew some problem was going to pop up. You just didn't know what it was, and you had to be nimble and quick and communicate. And we constantly were moving product around from distributor to distributor just to cover every day. And people will probably never know behind the scenes how much work was done by this team just to kind of keep product in the restaurant and flowing to the consumer. So it's been a real challenge. And on top of that, we've got fires out west right now that are having implications, and not to mention a few hurricanes over the last couple of months. So in 2020 can't be over soon enough from my point of view, from a supply chain point of view.
Matt, from the Cheesecake Factory, how did you deal with the supply chain, and what changes have you implemented that you're marching by today?
I think the biggest challenge for us, and I'll just commend our supply chain and kitchen operations teams really for figuring it out, but was more the logistics, right? We were able to get the product, as Steve mentioned, first you had to slow it down. And so there was a little bit of that process because you were expecting to do, $10 million, and then you're doing 4 per restaurant per year. And so you had to adjust quickly for that. But then there was just a lot of logistical day-to-day tackling and blocking because of the supplier side of things, working through all the different broadline. We use Cisco, all of their operations throughout the country, the availability of each of the unique SKUs that we use. And we have hundreds and hundreds of SKUs that come into our restaurants on basically an every other day basis because of the complexity of the menu. And so it's a sort of a different animal there. it was really the coordination, making sure that our teams on the ground had the best possible forecast, that they had worked up together with the operations and finance team to be able to provide the best possible ordering to get close enough. And then really from that point on, making sure when you had out of stock items, what was the backup plan? And, you know, whether is that a secondary vendor, is it being able to use a product that Cisco uses, or literally were you going to the grocery store to have to buy something? And that was not an uncommon situation, right? Because it was just too many moving pieces. So I think we have a really good system. I was amazed how well our teams dealt with it. And I think while we did it mostly for the consumer side of things, keeping the menu entirety intact actually helped us, because we didn't have to shift, you know, the volume of different items and try to predict the utilization. The ordering rates were kind of similar to what they had been on a sort of per unit basis. So we were able to scale that pretty effectively.
Great. Roland, how about Grimaldi? How did you address the supply chain?
Yeah, I don't have a ton to offer here. I think one of the rare benefits of being a smaller chain is we didn't have the near the impact as Steve or Matt as far as what they experienced. For us, our main food supplier accounts for about 75 to 80% of all that we need, and thankfully they were unaffected. So we were able to continue as business as usual for the most part. We had some local produce suppliers that you know, largely was fine. A couple delays here and there, but largely nothing really of note. So for us, supply chain was largely unaffected. For us, from a menu perspective, we're fairly tight and concise as it is, so we didn't have any menu changes either. So, you know, for us, it's you know, those food deliveries for us were typically 3 to 4 days a week as well. We didn't keep much inventory on hand. Everything's fresh. We do a lot of things in house, so we were just naturally set up to where that wasn't much of a factor for us.
Great, thanks. Hey, Patty, why don't we launch our last polling question now? And as we're getting close to the conclusion of our session, this polling question is, what are your same-store sales for the last 4 weeks compared to the same period in 2019? So you can see the various selections there that you can answer. So as our final question, and one that I've generally asked CFOs on panels, which is interesting to hear your perspective, especially this year after COVID happened, which this is not something that was answered ever previously when I've had CFO panels, because nobody could have fathomed that that COVID could have ever happened. But if you could each describe your key accomplishment as a CFO over your career, or if that's during COVID, that could be your key accomplishment. And what is your number one concern that keeps you awake at night? So Matt, why don't we start with you on this one?
Sure. I wouldn't maybe call it an accomplishment, but I would say that having an amazingly strong finance team to support an organization through first an acquisition and then COVID within 12 months makes me really proud to lead that and to do all the things we did to help the organization not just survive, but thrive on the other side of it. I think is imperative. For me to be able to do my job, I need to have that infrastructure in place. So that's probably what I would say. And, you know, COVID really gave me a new respect for, as I mentioned, working capital and liquidity. And oftentimes in finance, you talk about the leverage side of things. Well, that's nothing compared to cash flow. And cash flow is everything. It just reminded me of that, which I learned back in college, but cash is king, and make sure you have enough.
Great. Roland?
Yeah, so I think key accomplishment is very similar to Matt. I think, you know, when I joined the team, I thought we had a lot of opportunity to automate and digitize our department quite a bit. So get away from, you know, paper and more traditional ways of doing finance and accounting. So I think the team did a marvelous job over that subsequent 2 years, give or take, getting us to a point where this unfortunately hit and we needed to decentralize. We were able to do that without missing much of a beat. I don't think that without a lot of that growing and the advancements that we realized within the automation and more digitizing that I mentioned within our team, we would have been able to do that. So I'm very proud of the team and their work and their open-mindedness to shift away from some of the ways in which we did things prior to the way we're doing them today. I have zero doubt that that is a large reason we're able to be successful as a team, and to Matt's point, support the operations and everything else that we're doing through this COVID time. So I think from what keeps me up at night, cash flow certainly, to Matt's point, is always going to be near the top of that list. I think bigger picture, and this is more of a lever of that, is that and I mentioned this earlier, what the industry as a whole looks like coming out of this. You know, I mentioned earlier, I anticipate, and everybody does, we've all seen the articles and read through them, independents closing, other major chains closing, and just consumer behavior in general at a more macro level. I worry and I wonder about what the overall industry capacity is going to look like coming out of COVID. And so for us, and I'm sure Matt and Steve and anybody else who's in their role, is thinking about how do I capture as much of that pie as I can versus where I'm at today. And so I think kind of tying this whole conversation together, I think that's largely what we're doing. In the end, is trying to position ourselves to be front of the line to grab as much of that market share as we can coming out of this and be in position to capitalize on that. In the event it is a smaller pie, we want to make sure that we are comping, you know, as we were before. And if not, you know, what can we do to get there?
Great, thanks, Roland. And Steve, you're the cleanup hitter. Real quick, we're just a minute over, so not to rush you, but
Sure.
if you wouldn't mind giving your perspective.
Yeah, I'll be quick because it's going to be very similar to Roland and Matt. I cannot imagine if you would have asked me how my team survived and thrived in this last year, really since we hit the wall in March. I mean, they have worked remotely. They've had personal challenges. Some of them have had parents that have died. Some have had family members with COVID. Like I said, they've all worked remotely. We've gone through tremendous challenges. We did a remote audit. We did a remote upgrade of our financial systems. And they just, you know, keep coming through and keep coming through. I just cannot imagine having gone through, you know, how great of a team they are to have gone through all these challenges and come out on the other side with such a positive attitude about can do, you know, give me the next challenge, we'll overcome it. So that's to me so enlightening to see after all of this. And then what keeps me up at night is another shoe going to fall, or is this recovery going to be sort of a long U, or is there a W? You know, and if there's a W, what do we do? What happens then? So wait and see.
Yep, great. Thanks, Steve. Thanks, Matt. Thanks, Roland. Great job. Very energized panel and a lot of information. Thank you very much, and we'll hand it back over to you, Patty.
Terrific.
Thanks, Mike.
Thanks.
Take care, everyone.
Mike, Roland, Steve, Matt, really appreciate. Thank you so much for taking the time and sharing your stories. All right, folks, we've got about a 12-minute break here at this point to attend one of the roundtable sessions coming up afterwards, either the tax, finance, internal audit for managers and below, or internal audit for directors and above. Be sure to refer to the agenda for the link to your preferred 3 p.m. session. We'll see you then. Thanks, everyone.